The next thing we want to do then is periodic inventory. At the end of the period, you count up your inventory and you find out how much you really have left over and determine your cost of inventory from there. Remember that to figure out cost of goods sold, we can just take our beginning inventory plus our purchases minus our ending inventory, and that has to be our cost of goods sold. So the advantage of periodic is you don't keep track of what you sold when you sold it. So you don't have to have as good of a computer as we had to have before. I had those three that I started with. The red ones cost me $2, and then this little green one here was that pricey one for $4. These three were your beginning inventory. So we'll always know how much our beginning inventory was. We had 3 units. The cost then $1. 3 times 1 is $3. And you always know your beginning inventory cost because it's your ending inventory from the prior periods. This period, I purchased all of those. I purchased 1, 2, 3, 4, 5 units. It's these 4 units at 2 plus 1 unit at 4. $12. It's that magical 15 that we were playing with last time, our cost of goods available. How many units are in cost of goods sold? Well, we know that. We sold 2 and we sold 4. So we sold 6 units. And this is the question. How much is in cost of goods sold? In our ending inventory, we know that we sold 6. So grab any 6. And we know that we've got 2 left in ending inventory. But again, the question is, how much of that 15 goes to cost of goods sold? How much goes to ending inventory? Under periodic, I'm not going to keep such close track of what I've got. My ending inventory is 2 units. My cost of goods sold is 6 units. Still going to use first in, first out, but I'm just going to wait to the end of the period and say, okay, I know I got 2 laying around. The first in, first out refers to what you're shipping out. My 6 units that I'm shipping out are first in, first out. Those are what's going to be cost of goods sold. These 2 units are what's laying around. I can cost all those out, or again, if I know the old units got sold first, I really can just pick any side of this. So since this one's littler. So my ending inventory are these 2 units. That's the green one for 4, plus this red one, which is 2, $6. Now, really, truly, I can use my cost of goods sold formula where I know my beginning inventory was 3, plus my purchases of 12, gives me 15. We'll call that available for sale. I know I got $6 here is my ending inventory. So that means $9 must be my cost of goods sold. But I can double check. That's $1, $2, $3, $4, $5, $6, $7, $8, $9. There's my $9. With last in, first out, I'm going to assume I sell the last ones I bought. Remember, I sold 6 and I got 2 left over. The last ones I bought would be the first ones I sold, last in, first out. And I sold 6 of them. Those are the 6 that I sold. I got the 2 really old ones still laying around. I'm going to do this the same way because this one makes it really easy. My ending inventory is 2 times $1, or 2. Beginning inventory plus my 12, beginning inventory plus my purchases gives me the 15. I could save myself a little bit of work there. I knew that from the prior problem. I know I got $15 available for sale. My ending inventory is 2, so 13 is my cost of goods sold. It's really how you would do it because you go count your ending inventory and then back into your cost of goods sold. But I can double check. It's $1, $3, $5, $7, $9, and a 4. There's my $13. Weighted average, if you're doing Periodic, this is where weighted average makes the most sense. Because with weighted average, I'm going to say, I got all this junk laying around. I'm going to take the average cost, and that's the price I'm going to sell it at. So I really don't care what 6 I pick. All of these have the same value. I just need to come up with the weighted average. So 3 times $1 is 3. 4 times 2 is 8. This times this is 1. $15. Kind of knew that already. And then you have to have the number of units. 3 plus 4 plus 1 means I had 8 units. 15 divided by my 8 units, $1.875. The number's got to be somewhere between 1 and 4 where you've messed up. All I need to do is go back to, I know I had 2 units in ending inventory times 1.875 means my ending inventory is 375. I don't care which color they are all the same units to me. I'm going to shortcut it and just start with available for sale. You know, my available for sale is 15 minus my ending inventory of 3.75 means my cost of goods sold is $11.25. I can double check it. I've got 6 units that I sold times 1.875 does really equal $11.25. You can see how weighted average now becomes the easiest. And then the next period, my beginning inventory will all be at 1.875. That's how periodic inventory is different. Most people use a perpetual inventory, at least for the inventory counts. But at end of year, you're still going to do periodic inventory because some things are going to get lost, stolen, mixed up. You really want your books at year end to reflect that.